Michalowski from ForexLive.com. I'm here with Adam Button. Before we get started, let me remind everybody that trading foreign exchange carries a high level of risk and may not be suitable for all investors. In addition to that, leverage creates additional risk and loss exposure. So be sure that you use the proper risk management techniques and tools in your trading. All right, let's get into what's happening over the weekend. We have the Greek election. We know that Cyprus is in, and they formed a government quicker than perhaps maybe some of us expected. Adam, what's a take on this? Good, bad? Still yet to see the results. Is it Greek? Is it Greek versus Germany? Is it Greek and the whole EU? What's your take?
Yeah, I look at it as a buy the rumor, sell the fact, or whatever, flipped around kind of trade. I mean, euro got beaten up. That's a bit what you expected. I mean, this was the worst case scenario in terms of how the election played out. But the euro's higher, and it shows a little bit of exhaustion, 5 cents in a week. But what's interesting at the moment, and it is a little bit of good news for Greece, I suppose, is coming in, it's a bit of the game of chicken. You had Cyprus coming in, and ahead of the election, everyone was saying they don't want to work with them, they won't negotiate with him, blah blah blah, basically telling the Greek people not to vote for him. Now he gets in. You have UK Prime Minister David Cameron on the wire saying he's proven to be reasonable. Others saying the same sort of thing. So it's the other side that seems to have blinked, and maybe that sets the stage for negotiations. And it says, okay, they're going to give Greece a little bit, and then Cyprus can claim a victory. And maybe they don't have to give them too much, and Greece just continues to muddle along without leaving the eurozone, and a few billion lost here and there, but in the grand scheme of the eurozone, that's pennies. So there is some good news there, but the story's not over. We'll see. That might just embolden them further, and then you see where it goes from there.
Yeah, it seems like you run an election and you stay all to your side, and then as the election gets closer, you start to move a little bit from the left more to the middle, and maybe the EU leaders, and things like you mentioned, Cameron, start to come back, toward him a little bit as well, just to have some sort of compromise that goes through. But I think you're right that the story's yet to be fully told here, and the markets may be reflecting a little bit of a relief rally here in the euro to start off the week after moving lower initially, but now we're seeing the price move up a little bit higher.
From a technical perspective, what are you seeing here? I don't think it should be a surprise to anyone to really see a bounce in the euro. The timing has been tricky. You maybe would have expected to see it Friday, and it was just the smallest bounce, and then it got totally wiped out in Asia. But now, it looks like on your chart there, we're popping back up toward the high, at least from Friday, around the 112, I guess, sort of 80 level. Where do you think it's headed next?
Yeah, Adam, I have, in the initial move to the downside, I had earmarked the 111.09 level. Now, I don't have the chart necessarily to show that, but if you go all the way back to 2003 in the euro versus US dollar, that was a nice little floor that left there was an island below that floor. In other words, we had a low, and then we broke through, and then we moved back above, and it became a floor again, and then moved higher from there. That was the last time we traded at that 111.09 level. So today, in the first couple hours, we went below that level, but since that time, we've seen the market move higher from there. And the other key level from a technical perspective, from my perspective, from the charts, comes off of the monthly chart here in the euro. Get it on the monthly chart. There we go. And you take the 2000 low and the 2008 high. The 61.8% retracement comes in at the 112.09. If you saw my weekend video on the euro versus US dollar, this was the line in the sand that I had earmarked for the euro from a technical perspective, bullish or bearish after the election results. And so the move back above that 112.09 level here, you can see how we're finding some support against that level. We actually closed right near it on Friday, so the market was kind of in between, bullish or bearish, but moved back above that level. So, today, looks like the relief rally is underway, and as long as we stay above that 112.09 level, I see the market potentially, having a little bit more of an upside.
Upside, yeah, you have an argument for money moving into Europe as well. German DAX breaking out, so money might move in that direction. There might be a little bit more optimism about the economy now that Draghi's taking those steps. I mean, certainly Eurozone governments can borrow and spend if they so choose. So, and maybe it comes from the other side as well. If we look ahead in the week ahead in the U.S., we have some very big events, namely the Fed on Wednesday. You see some other dollar crosses also could be showing some weakness. I'm hearing a lot of chatter that the Fed might come out a little bit more dovish, just writing about how they've been quiet. But if you think it through, the stronger dollar, that's taking a lot of the pressure off inflation. These lower bond yields, it's certainly a disinflationary signal. Weakness in Europe, weakness in China, weakness in Japan. So really, what's the rush for the Fed? And one I'm going to be watching very closely is tomorrow morning around this time is durable goods orders in the U.S. It's been consistently weak, and that could give the Fed pause. And the other big one is this rumor that's getting a lot about massive layoffs at IBM, 110,000 jobs, most in the U.S. That would be the largest corporate layoff in history, almost double the previous record. It sounds outlandish. You only see those kind of layoffs in a bankruptcy or something like that, but it's out there right now, and if it's true, it's a lot to think about.
So you think that that leads to perhaps this relief rally in this relief into the out of the dollar into and have a little bit of the dollar weakness?
Well, maybe it's time. I mean, we look at that euro chart; it's beaten up. Dollar yen is an interesting one. You might want to look at that, but to me, it's consolidating a little bit. It certainly hasn't moved higher. The dollar to take even 500 pips off the dollar in any cross really would still leave it in an extremely strong position going forward, and really wouldn't change the underlying story. And if you stitch it together with the fundamentals, maybe it's the Fed is a little bit less hawkish this week. The OIS market, if we look out there, it's only pricing a 15% chance of a hike in June now. So maybe they take that off the table, and then dollar bulls start to take a bit off the table, and that turns into the story. What do you think on the technical side?
Well, looking here at the dollar versus yen, we're off the hourly chart. We're not necessarily showing any sort of dollar weakness just yet. In fact, we're seeing the dollar yen move further to the upside. But if you look at obviously the daily chart here, as you mentioned, we've been in this sideways pattern for quite a long while here over the last couple of months, really. And so the market's poised to move one way or the other, but if the dollar is going to go lower, against the dollar versus yen, if the Fed is a little bit more dovish in their comments this week, in their statement this week, then what I would look for from a technical perspective is movements back below the 100-bar moving average and 200-hour moving average, I should say. And this trend line's been pretty solid through here, but we went below it here in the early hours of trading here today, which was probably the biggest break. I wouldn't call necessarily this a break here, but so let's ignore that move off the news and look for further selling through here. And if we get that momentum through that dollar yen chart, then that idea of the dollar getting weaker might come to fruition here. Again, it'll probably need the help of the Fed, I would think.
Yeah, it makes a lot of sense. Tied in, it changed channels here. I mean, gold looking a little more interesting today, sort of a retracement phase as well, and maybe that is an early signal as well. And oil, I'm bearish on oil right now. We had some comments come out earlier from El Badri, who's the leader of OPEC, saying he's open to discussions with non-OPEC countries about cutting, but it seems wholly unreasonable that everyone would come to the table and cut production. Oil spiked up about $1 on that, but it's back in negative territory now. When you look at gold and oil, what are we sort of signaling there? Let me give you a chance to get the numbers up. I mean, I've been long gold myself since the start of the year, really on the seasonals. They're very strong in January, and it gained almost 10%. giving almost a percentage point back today, but still to me looks strong. But if we come back to maybe 1250, 1240, there's nothing. Again, it could. There's not a lot of news this week. I mean, the Fed might turn out to be nothing. Durable goods, a few other reports. We have the RBNZ. It could be tradable, and that again might cause some dollar selling. Let's talk about them moving to a neutral or dovish stance. Excuse me, but I don't see the argument from their perspective. I mean, everybody after the Bank of Canada started to price in cuts, and everyone else a little bit more dovish. But New Zealand isn't Canada, and I think that market got a bit ahead of itself there.
Right. Yeah. Sorry about that. I mean, it took me a while to get the gold chart up here. Struggling along with it, but from a technical perspective on gold, we have obviously been in a huge move to the upside here. I took note of these levels here below the 100-hour moving average on Friday, how the market fell below that level and fell below here. I didn't think this would hold up into the weekend with the Greek election and all. And indeed, the gold did move higher, but we are getting that counter trend sell-off here in gold. What is interesting, again from a technical perspective, is how we need to get below these moving average levels. However, this is what I call trading in between the goalposts. We have the 100-hour moving average, 200-hour moving average. It's a point where the market's a little bit unsure of which way it wants to go, kind of like that dollar yen, waiting for that idea that or that break either to the downside or the upside. So if we do get that move below the 200-hour moving average, I think the gold idea of a little bit more of a correction to the downside had some legs in it. What about the euro? What about the euro Swiss? What are you thinking about that?
Yeah, it's keeping it alive. I mean, bit of a squeeze back to the upside here. Tried a couple times, get below 98. I mean, there is not a lot to go on the fundamental side. I mean, the market is trying to find its level, and it's almost a bit eerie to have been in this 98 to 102 range since the peg was lifted. You think you go around and test some different sorts of levels, but it's been awfully quiet in Euro Swissy, and then you get a move like we've just had in the last 15 minutes or so. We've gone up from right around 80 overnight all the way up to 101, just ticked off it now, and now we are starting to have some sellers. So technically there is very little to go on, and I think people fall back on the big round numbers, and maybe that's just what we saw now. Is it ticked right off, I think, 101. And it skidded back here 30, 40 pips, but I mean, it almost seems as if a full cent or even 2 cents is nothing in Euro Swiss, and to me it just argues for chasing momentum and going with whatever move is the last move, without putting too much thought into it. But do
you think there's anything to the idea that the Swiss that the Swiss National Bank may lower the rates even further to help the Euro Swiss to the upside?
Yeah, I mean, you would think they want to get away from that. I mean, if they start intervening or doing more moves, certainly their neighbors are not happy. I mean, we saw Croatia on the weekend peg their currency to the Swiss franc and Poland as well. A lot of people there took out loans in Swiss francs, and you can imagine if you did that, you're down 20-30% overnight on whatever loan you took. And there's pressure on politicians, and we saw in Croatia there's 60 or 70,000 people hold these loans and are basically wiped out. But instead, I think you're going to wipe out the whole country, or the foreign exchange reserves. The central bank even spoke out against it there. So yeah, there could be some of those flows that are changing the picture. I mean, that would certainly entail Swiss franc selling. The Swiss franc is the worst performer today. So unless you have a friend at the central bank, it's a tough one to go with. But to me that looks like a flow-driven move, where just absolutely relentless buying right from 98, right from when Asia woke up, and really as Europe started to get going is when it took off. So that's what I see there. And if it's anyone buying, I don't think it's the Swiss National Bank. I think it's others.
Right. All right. Well, let's end it there, and we'll come back to you to you all at some other time this week, hopefully on perhaps on a daily basis. But for now, let's end it today. My name is Greg Michalowski, and I'm with Adam Button, and we wish you all good fortune in your trading. We'll talk to you again next time. Bye bye now.